That's my quant.
Your what?
My quantitative.
You show me a pay stub for $72,000 on it, I quit my job right now and I work for you.
Be first, be smarter, or cheat.
I'm not fucking leaving.
Not leaving.
Today.
Mr. Patel said he is not leaving.
Welcome to the fucking show.
Mr. Money said he is not leaving. What a great day to be here. Appreciate some of you guys will be trickling in over time because I believe Tevis and Steve are finishing up their show with Asian Steve. They broke the internet tonight, Mr. Patel. I don't know if you saw that. Both Steve's in one spot. Yeah, isn't that what they call Jason? I don't know why they call him Asian Steve, but I never understood it. But
you know something about Asians? Asians don't have the gene necessary to process alcohol, and so that's why when Asian people get drunk, you see that their face turns red or something. You know that?
Yeah.
It's an interesting thing.
Yeah.
Like one of my friends, she can't eat cilantro because she's missing that cilantro eating or something where it makes people who have that taste like soap. So anytime we go to a restaurant, it's cilantro based, she gets I can't have that. It's interesting.
Sounds like you have some fancy friends, Mr. Patel. I, on the other hand, don't have any of that. But okay. Interesting stream. We obviously had some news come out today about Google and their apparently, Chris, I know we talked a little bit earlier, 100-year bonds. Do you hear that?
Yeah, it's pretty insane.
I did not know that they were 100-year until I was listening to Hot Steve and Tevis. Bond issued. So we'll pull that up. We'll talk about that. Tech's first 100-year bonds since the dot-com era. So that's pretty interesting to hear about. I'm curious if they ever intend to actually call it. I'm curious when they actually show up, what actually transpires. Are they just going to be something where they actually keep it running for 100 years? Or is it something that... anyway, interesting thing to hear. I've had a lot of conversations with people in person about them being surprised about how the market has yet to really retrace overall, but their tech stocks are down massive. And we obviously have positioned ourselves in our portfolio to have Verizon, and that's obviously run up a good bit. We'll see that in the public portfolio and a few other things that I think have positioned us well for when the market decides to kind of take a rebalancing act like it has. We have obviously seen ASTS drop a good bit, Rocket Lab drop a good bit, a few other companies dropping. And so with that, we've taken the opportunity to be invested in stuff like Verizon and other things. And we've seen those obviously skyrocket in value comparatively to some of the tech names. So we have seen some recovery, but as of today, as we saw, Hood took a little tumble after hours after their earnings report. I haven't fully digested it yet, but I have some leaps on that. So that'll obviously come up pretty poorly tomorrow. But overall, up on those leaps because I think I bought them at $73 and I think it dropped to 79 after hours.
Can you share my screen? Oh, it works! I got it! I got
that's pretty badass.
Yeah, so now I because sometimes what happens, I want to show you guys a certain chart and stuff. And so I actually want to draw on this thing and just to kind of show you, here's an example. I'm looking at this, right? And so I wanted to kind of highlight things, show things, but sometimes it's difficult, right? So now I have the Apple Pencil and I have this and what's the markup? So I just have to do, there's this feature where let's do markup. Ooh, this, let's see. That's fine. I don't care. Let me see.
We're getting in the trap.
Yeah. Let me see. All right. This way I could mark up stuff and show you guys and, do stuff with it. Because I think that's a really cool feature so that people can see what we're looking at and what we can do together. So I'm still learning how to do it, but there's a lot of features that are on here. Yes. Okay, cool. I got it. It was a freaking pain in the ass, man. I had to download like a separate app and everything else to get it to work. But now that I got it, I'll figure out ways to actually monetize and use this thing. So
Now you can write it off.
Yes. There we go. Yeah. Cool.
Is this true, Chris? Is this comment true
What?
on the screen?
Okay, so let me be very frank. Okay, I still think Palantir is overvalued, but I'm no longer anti-Palantir anymore. I am mildly anti-Palantir.
For clarification, were you ever actually anti Palantir?
I was anti-Palantir valuation, and I still am anti-Palantir value. It's just not as bad. So
Okay. I just wanted to clarify that. I
Yeah.
wanted to be sure that people didn't say like Chris wasn't a believer in the company. I think you always have been,
yeah.
but you just were always upset with the valuation.
Yes, exactly. And it's always hard because like I want to buy this company, but I just can't see myself buying something at a very, very unusual price. And does that mean I'll miss out on some gains? Probably, but also means I don't take a 30% drawdown either. So, and like I said, a lot of it has to do with just, if you check how a person invests, like over a long period of time, you can typically see the scarring that they've had in the past. And that's the reason why they invest the way that they invest. And I think that portfolio challenge that we have with Steve, me, you, and Tanner, it kind of highlights that, right? So all the picks that we have, like you really like, you went ham on like some really speculative names, but they worked out well for you. You took high risk, but you got high reward, right? Steve tried to be a little bit more value centric, and it didn't work nearly as well for him, with the exception of Micron, which is keeping him out of the black. I mean, out of the red. He's chilling right now can you show that? Do you have it loaded?
Yes, I do.
There we go.
I don't know if they fixed the one. Which company did the stock split? But
Yeah,
this is where we're at right now. Tell me if you want me to go into any particular.
No, that's good, man. Like, so wait, is this the app for it? I thought we were just using that spreadsheet.
I don't have the spreadsheet, but if you have it, you can send it to me in the private chat and I can use it.
Yeah, let me see if I have it right here, because I think that one didn't cover some of the dividend stuff. But let me just see 1 second.
Oh, okay. I'll check if I have it as well.
Because this is the one that
somewhere.
This is the one that Steve, that we all used.
Steve.
Right, share this one. Okay.
Madden.
So Amit is at 15. You're at 30. I'm at negative. I'm like flat. Tanner's at 10, and Steve is at -2. Okay. So yeah, this is where we are basically. But you can see, like, based on the portfolio picks, where each person's like what is it called? Targets are. So
Man.
yeah.
I don't
Yeah,
know.
you guys came down a lot. Like, some of the stuff just did not work out, but that also means that there's probably some value there that we should be looking at among all the companies that we have here. Actually, let's see. Hold on a second. Let me do this real quick. Leaderboard, sheet 5. I want to see which ones have been the best ones and which ones are current closing price. And damn, I need to. Okay, hold on a second. Let me do this real quick. Okay. So take this column, and then take this column. Current price. No. What's the difference between current price and closing price?
The closing price is what we initially bought it all at.
Was it? Oh, that's right. Okay, got it. You know what? I'll create this later and just see which ones are the best performers and worst performers among all of these. Actually, I could just do that right now. Give me one. Sorry, give me
Duolingo, bro.
Dude,
I don't know. It's Duolingo.
Duolingo is getting Correct. But that's because like there's a challenge to their business model. Anytime you, this is the one downside to this portfolio challenge is that you can't adjust. Like once you're stuck in something, even if like the news comes out and things change, you're kind of stuck in your positions, right? So it's like, yeah. You want to bring up our Fidelity one to just to show contrast how we've done compared to this thing?
Yeah.
Yeah.
Here we are. Yeah. So while Chris is pulling this out, you kind of have to take this with a grain of salt because we can adjust in and out of the markets with our portfolio, right? And so while this shows a 14% total return, that's because we are buying and selling and moving things. So sometimes like we'll take profits on Carnival Cruise or sometimes we don't take anything because look at Webull, it's down 40%. But we've obviously come out of the trenches with Venture Global being our largest position. I think we actually trimmed a little bit, if I remember myself, Chris, and we put some of that into PDI and something else. And then we put some money into Verizon. Obviously, that's turned out extremely well because that's up 20% just in the past couple of weeks. So really,
and we got that. And we got those dividend payments, which is nice.
Oh, did they come through?
For Verizon, I don't think we bought it before the X date, so probably not.
Okay, I'll check in the
in
the back end, but maybe that's what that cash is here. Maybe that's because I bought Amazon Directional yesterday. But this is really it. I mean, Meta's kind of hanging out there at 8%. PDI, which is mostly an income fund, even that's up 4%. Rock Lab and ASTS have obviously retraced back a little bit, but still up massively. Next Decade, not performing well, but we also haven't averaged down on this one. So that could be an opportunity if we wanted to potentially trim and say VG, potentially, I'm just throwing things out there. And then average down on Next. Maybe tax loss harvest some of the higher shares that we bought in VG because I'm sure there's some higher value shares because their cost base is at $9. So likely that there's some $10, $11, $12 share in VG that we could potentially use tax loss harvest, technically put it into Next instead. This is our overall portfolio. Where do you think we're at in terms of the year to date as well as 1 year?
Not sure, man. Not sure.
So on the left, we have year to date. Year to date, we're at 18.3%. Keep in mind that does not include performance today. This is up until yesterday evening. It takes a little bit of time after the market closes for this to update. So handily outperforming the S&P 500 for the full year. For the last month and some change. And then on the right-hand side, you have the last year of performance, where we pretty much doubled the S&P 500, which I think is still pretty impressive considering we had such a large drawdown in VG and Next. So if you take that into consideration, that's anyway, I just think it's pretty interesting how it's done pretty well.
Yeah, man. Wait, what's this negative? What the hell? This can't be right. What's the formula? Current. Why is this subtracting like this? Oh, because it's supposed to be by current, so that's why. It's actually not B2. It's this. Wait. No. What the hell?
That's right. That's right.
No. It's because like the change right here is not right. So basically, it's actually supposed to be equals this minus that. So because it's supposed to be positive, right? So this now is supposed to be there. And why is it? There we go. Now, hold on.
Oh, because Micron's gone up so much. Got it.
Yeah. There we go. And now this has to be changed from the color scale is the opposite direction. See, I'm used to Excel, but
Yeah, Google
let's
Sheets
see.
isn't the easiest to use.
Why is it this way? Invert it the other way. So the min value, no. Okay, so this,
you
let's
just-
say, is going to be green.
Yeah,
And
exactly.
make this red. There we go. Done.
Perfect.
Okay, so these are the most red. These are the most green. So basically, these are the best performers, and these are the worst performers. Yeah, there we go.
You got
Dude.
who got Micron? Was that you?
No, it was Steve. Micron is Micron, I think, is like one of his only green ones, but it's like holding his entire portfolio. Like Micron and Broadcom. And that's holding his entire portfolio from going like super negative, from double-digit negative. I mean, it's not like he has bad companies. It's just his timing was bad when it came to entry, right? And it's the same thing with me too. Like companies like Microsoft, Meta, CrowdStrike, Salesforce are all down, 42% down for PayPal. By the way, I took a position in PayPal. You were on yesterday, so you know. I mean, look, a lot of these things are just oversold, man.
Yeah, what did you mess up? You messed up one of the stocks. What
Which
was my
one?
V? That says V on top of.
Oh, that's Rocket Lab. Sorry.
Is it?
There we go. That's your Rocket Lab position.
Okay.
Yeah. So Rocket Lab, you got in at 26. It's at 72 right now. Amazon is right here. EOG, Dutch Bros. We have to revisit Dutch Bros, by the way.
Reports on Thursday.
Yeah. We'll redo that like when we have some time. But
Keep buying every time I get paid.
Have you been buying?
Yeah, every time I get paid.
Oh, nice. I haven't been added in a long time, actually. Might actually
I
consider.
didn't for a while because it jumped up to like $80, and I was like, Had it jumped to like 95 or 100, I probably would have sold it, to be honest.
Yeah.
But I honestly, just based off what I know with this company, I think the market cap can go to potentially 25 to 30 billion. So I still think there's a 2.5, 3x left in it. And I wouldn't be surprised if it's potentially more. And I think they're going to get to a place where in the not short term, but eventually they're going to start doing buybacks and dividends in the next 5-10 years. So
I have one thing that I wanted to tell the chat real quick. One of the things, and maybe if I can find the clip, I'll play it, but it's something that Stanley Druckenmiller talks about. He's like, every year, January 1st, I completely forget about last year and start evaluating every company like this is the baseline. You know what I mean? Like right now, if we live in last year's like time frame and mindset, we can't find the opportunities for this year. Have you heard him say that? Like, have you heard that saying?
I don't ever really. Year to dates don't really affect me like it does for most people.
Mm-hmm.
Really? I think a lot of people. I think a lot of people get super lost in quarterlies, and I look at I read between the lines on the quarterlies. Like, of course, I want to see my companies perform, but I think so many people, and I've said this before, I think so many people treat earnings reports like it's the Super Bowl, and it's not. Like, to me, it's like a batter that's going up in a baseball game, right? Like, the fact that, like, and I think Bezos said this perfectly, and the way I invest is how I invest, so it's not always what's right, but Bezos has said this perfectly in the past, which is when people congratulate me on a quarter, he's kind of like doesn't really get like super excited because like I worked on that 3 to 4 years ago for it to be, you know what I mean? Like some of those things just take so long for him to actually show up in the wavelength that is the earnings report that it's kind of silly that when people kind of get patted on the back for it, So to me, that was like a really interesting kind of take on it. It's like you need to be investing in companies that are executing, and sometimes it just takes a long time for that execution to really show up. So when people get hyper focused on, oh my God, they missed earnings, let me sell. It's like I could get it if you're a trader, but to me, a lot of the things that I look at take way more than a quarter. But it is important still to listen. I'm not saying don't, but I'm just saying it's like, you could still have a batter. If you think about it like a baseball game, you could still have a batter show up, and he could have a very pivotal part of the baseball game where you really need him to fucking hit the ball. And if he doesn't, he still fucks up, and you still are like, you know what? That was it. I'm done. I'm not going to be a part of this anymore. I'm choosing the other side to win. But I think so many people are so much thinking that they need to, gamble on zero DTEs and But I'm curious if you find the Druckenmiller quote, because I don't know if I've ever really heard it.
I see people like quoting it on X, but I don't know if I can't find the video clip. But the reason why I say that is because I was talking to them about it, and here we go. I found it. Because they were like, listen, I had a bad year last year. What do I do? Right. And I'm like, move on. That's all you can do. Reevaluate your portfolio for this year. Everyone's going to have those times, but check it out.
Another golden rule I have is January 1 has always been a great resetting of risk for myself. And for those of you who gamble, you probably know that 95% of the people that go to Vegas lose money, but the odds are 33 to 32. So 95% of the people shouldn't lose money. It's because people who get down want to go home and tell their spouse that they made money, so they start betting big when they're on losing streaks. And then when they get up, they want to tell their spouse they made money, so they're playing very small when they're doing well, and they're playing bigger and bigger when they're doing poorly. So we have always believed January 1 is sort of when the house starts. And if I'm up, and I think this is the reason so far we haven't had a down year, I'm sure we will have one at some point. But when I'm up, I'll play much more aggressively. And I see a lot of managers who get up 20%. Oh, I want to book my year. I made my high water mark. Let's go to the beach. I'm the opposite. And frankly, I learned a lot of that from George. If you're up 20 or 30%, you're playing in the house money. That's when you try and get up 60 or 70%. And you're usually hot at the time. Any of you who have managed money, the most important thing is to monitor yourself. I don't know why streaks happen, but they happen. They happen in baseball, they happen in putting, they happen in money management. And one of my jobs is to know whether I'm hot or cold.
So the whole thing is, when I see right now, we look at our portfolio challenge that we have, right? And we're looking at it and we're like, oh my God, look, we lost money, blah, blah, blah. We're down on this, we're down on that, we're up on this, we're up on that. And so if we keep it right there and we have that mindset, what happens is we will miss out on opportunities going forward, because it's like, okay. So our job right now, January 1st, should be, let's reevaluate where we are in the current market cycle. Let's reevaluate what's in the portfolio. Let's make sure that we're aligned for what is positive for this year, right? And so a lot of the portfolio moves that we made over the last 60 to 90 days were primarily based on a lot of the changes that we saw coming. Like we were up a lot on ASTS, we were up a lot on Rocket Lab, a lot of the catalysts that were coming along. So we said, you know what, can you bring up the thing real quick so we can show people? We made some money on UNH and we recycled some of that money. And so because of that recycling and moving things around to kind of better align the portfolio with what's coming up, you can secure some gains, but then also get into positions where you're continuously compounding your total returns, right? You're not just hanging around in something and, if it works, it works. If it doesn't, whatever, so.
Yeah, I think we trimmed $500 from each Rocket Lab and ASTS, and I think that's what we put into PDI, if I remember correctly. I think we also trimmed a little bit from VG and put that into PDI. I need to double check on that. And we trim sometimes.
Yeah, and we sold a little bit of our Brookfields, right? So our Brookfield properties we knocked out.
I think we might have put that into Verizon. I don't know.
Yeah.
Around the same time I made all those moves, but yes, I agree. And
Yeah.
Drunken Miller I think is a good idea. I think Jan 1 is a good time to like, rethink about the entirety of the portfolio as a whole. But I don't like the fallacy of like this quarter to quarter, I need to be above or below a certain return. Like I like to look at individual companies and their own business cycle. Like I wouldn't compare like where next decade is in terms of its market valuation with like a venture global because they're in completely different parts of their business cycle. And so that's very comparable with how I like to look at all the, and so sometimes when people are sitting there like I'm down, like, and I prefer sometimes stocks are down because sometimes they don't get much cheaper, right? And yes, and I think a good quote that Lynch always says is a stock can always go to zero, right? So just because it's $2, but eventually, if a stock has any sort of substance and it's not going bankrupt, the lower it gets, potentially there could be a floor. And if there is a floor, if you do have that, if you time it appropriately, you have that opportunity. But I don't like to try to think like, oh, just because I was down this year, just because I was super up this year, I can kind of take time off. I like to look at stocks individually at where they're at. And there is an underlying business cycle that plays into things as well. But I like to look at them as their own separate entities rather than a portfolio and blend them all together. Like to me, I think while that helps to an extent, and I think he said something that I follow a lot, which is when I'm up and doing well, I get more risk on personally. Like Rocket Lab, for example, like you've been telling me trim, and I get it, but to me it's just like, well, it's allotted me the opportunity to get more risky and to find other like if I'm a truffle pig, I'm going to try to find more truffles, right? Like or I could just be like, oh, it's just like I could keep the same lifestyle I have, or I could get into the tried my hand at the Billionaire Boys Club, so I want to do something that I haven't done before. I'm always trying to learn, I'm always trying to push myself, and I'd rather go to the grave knowing that I tried rather than took it safe.
I got you. Yeah. All right. So what are we up year to date? Let's see. Year to date versus S&P.
Year to date 18 versus 2% for the S&P, and then 35% for past year versus 17.
Very nice. Very nice. The one downside to this portfolio is that I think there are really, really strong opportunities in this market to pick up some spreads. And that's why I said yesterday to you, like, I was the original one that said, Matt, we shouldn't do spreads because I don't want retail investors to get into something that's a little bit more higher in options, like what is it called, like risk wise, and I don't want to teach people how to do it unless they're because it is somewhat risky to do it. But when markets like this sell off, they can provide some crazy returns. Like
I still don't want to. Meeting some of the people that I met in New York. No, I don't think in a public portfolio I'd ever do spreads.
That's a good point. I'm kind of in the same ballpark as well, man.
Unfortunately, until there's like a group of 5 to 10% that are unfortunately ruining it for the other 90.
Yeah, that makes sense.
Most people are great. Most people do their own due diligence and stuff like that. But the last thing I want is for that other. And I've seen this happen before. Like I hear people blame other YouTubers that we are friendly with and be like, "Oh, he screwed me," and it's like he didn't screw you at all. You screwed yourself, right? Like just because you don't like, and I see this happen a lot. Like people know just enough to get themselves into trouble, but not enough to realize what the true risks are.
Yeah.
And if you don't understand what I just said, like I'll say it again. People will understand enough to get themselves into trouble. But they don't understand enough to understand what the true risks are. And I say that because I've done it myself, right? I've lost hundreds of thousands of dollars likely because I thought I knew something that I didn't actually know. So I had people straight up come to me in New York basically and say, I don't do any due diligence. I just parrot trade what you guys do. So
So we might as well keep the parrot trading as small as possible so that if there is a losing year, they're not blowing up their account, right?
yeah.
All right. That's a good point. Yeah. All right. So we'll keep some of that stuff off the main page. But I mean, look, we're beating the S&P 500 without doing options. We do some covered calls here and there on some positions, and actually it might not be a bad idea. Yeah.
On VG, yeah. I'm slacking on my duties, Chris.
That's okay. I mean, it's fine. Maybe we should be doing some covered calls now on VG, considering that where they are. I don't know if there's going to be a lot of premium in the Verizon ones. We don't have enough shares to do what is that called?
Covered calls.
Yeah, we don't have it. Yeah, we don't have enough shares to do it on anything else. Maybe on Next Decade, but the premiums are probably garbage.
Yeah.
So see, the VG is the only one that you could actually do some covered calls right now and make a little bit of yield on it. I wouldn't think that the other ones are out there. So
Hell the great. Thank you for the 5 gifted, my man. Much appreciated. Much appreciated.
Yeah, but I think right now the great opportunity is, in my opinion, PayPal. And I don't know if you keep up with Fiserv. I have a position in Fiserv. I've been adding to my position in Fiserv. Today's report was amazing. It's not something that like the mainstream YouTube community covers, but it's a very strong business. Me and my wife, we were at our second Thai place because our first Thai place closed. But I noticed on my bill today, it's Clover. This is interesting because I think last year they had Toast. And I was like, I haven't seen that ever, where they've moved POSs from Toast to Clover. Never seen it. This is the first time I'm seeing it. So I'm just giving an anecdote. I don't think that there's actually any real like thing, but it's just cool to see that, you know. So everywhere you go, when you look at certain things like, you know, like Peter Lynch wise, this is like one of those hidden gems that's out there. And a lot of this is just very structural. If you understand how the payments business works, you go to the 5-year chart, you can see like, look at that massive drawdown in Fiserv from all the way to 225, right? So now this thing has gone structurally oversold. And because it's structurally oversold, there's actually a potential for a nice slow recovery of this. They have new management. They've got entirely like new operating structure. They've got a lot of debt on the balance sheet. But if you look at the earnings that came out today, they're starting to work on those earnings. The cash flows are strong on this company. Growth expectations have absolutely collapsed, which means that now you're getting this at a significant bargain to its historical ranges. Yeah. Per quarter.
Net per quarter. Yeah.
Yeah.
That's why I sold puts on it, man. I think in that
you sold puts on Fiserv?
Yeah, where am I at?
Congratulations. That's my boy. You're my boy, Blue.
I bought let me give you guys insights into the mind of Mateus Mula. I mean, we talked about it, and you know, and I know what they do. I have a family member that works in there, so and I'd like you said, like from they lots of acquisitions, and I think there's a lot of bolt on, and so let me see. I just was like, this company's not going to zero.
Yeah,
I sold them December. I sold 2 December $100 puts, so in the money.
Nice.
So I think at the time they were still at $70 or whatever, but I was just like, dude, in the long term, I was like, this company is eventually going to return.
Yeah.
So, and I didn't have the cash like on hand, so I just used a little bit of fake money using the portfolio as collateral. And I was like, in worst case scenario, like this company prints and they'll either buy back or pay dividends, or eventually it'll come back. But $2 a share per quarter, God damn.
They're prolific buyers of their own shares. The thing is, what happened was, if you understand the company, they had this run up because of Argentina, where inflation skyrocketed and they started making a crap ton of money because they were providing this merchant service where you could get paid ahead of time right? So like, let's say right now what happens is when you guys, all of you guys in the chat, when you guys scan your credit card, right? You go to the terminal, like the POS system, you scan it. What happens is the merchant does not get paid for 30 days. Okay, so when you swipe, it's not like it just hits their bank account. It works its way through the system, through the intermediaries and all the technologies and the banks and everything. And eventually the merchant gets it, but they get it 30 days. What Fiserv was able to do is say, look, we have all this cash flow that's coming in, right? Like Susie's buying from Jim, and Jim is buying from Steve, and Steve is buying from Matt. And everyone is kind of transacting with each other all the time, and everyone's got different pay dates. What they were able to do is sort of leverage when everyone gets paid to provide a service where, Matt, the minute you scan, you get paid the same day, but they'll charge you a fee for that service where you get paid early, right? Those fees are very, very lucrative because you're not waiting 30 days. Right now, if you're a business in Argentina and inflation is running at 300%, by the end of the month, the money that you have, you might have, you know, you're gonna be dealing with less money technically on a cost value basis, right? So you're gonna say, fine, yeah, here you go, Fiserv, take 10% of the take. You know, I just want my money faster so I can do stuff with it. So Fiserv was able to get and remember, this is an entire country, by the way. They have a big presence internationally. So Fiserv is not just serving one or two regions. They have
UK
exposure all around the world. Yeah,
everywhere.
They're everywhere. They're also one of the largest banking core providers, like technology service providers everywhere. So they're a technology company. People look at them and say, "Oh, they're a fintech." No. This is like this is a really big business. Okay, if anyone here is like, just do your due diligence. Fiserv is not a small company. They are massive. They have a lot of debt on the balance sheet because they did acquire a lot of companies, but a lot of that company is value accretive to their business.
It's a lot of bolt-on.
Yeah. So now they've got a situation where Argentina, the inflation's come down, so they no longer have that high margin lucrative revenue that they were getting before. So the challenge is they're still growing, but if you are going from like 10% growth to now 2% growth, everyone's like, oh, you should be a value company. And now everyone's kind of re-rated it from a growth company to a value company, but they've done it and they've gone way too far. The good thing is now, because of that debt load that they have, as long as they keep paying down that debt, which is exactly what they're planning on doing for the next 2-3 years. And then also they're going to be returning back to share buybacks. Dude, if they're buying back shares at like $60, $70, you're talking about $4 billion on a company that's worth $35 billion. It's like 10% of the float every year. It's easy to see where this thing ends up. This thing ends up at like probably 90, maybe $100 by the end of 27. You know?
Yeah. Yeah, I think this is probably why they got hit. I mean,
yeah,
3.8% ops margin decreased, but I mean, look at this, $8.64. Like,
oh, sorry,
that's impressive.
Hey, can I get some ice water, honey?
Yeah.
Thank you, honey. What was I'll tell you got to tell me about this Thai food. When I talked to you earlier, I was like, dude, what am I doing? Because all I got was Whata wings from Whataburger, because they're like, I don't know, 800 calories or something like that, and I just needed something small for dinner.
Yeah,
and so
noodles. I'm a diehard Drunken Noodles fan. I love Drunken Noodles. My wife gets the Penang. My wife gets a Penang curry. I get the Drunken Noodles, and I usually get it with the fish sauce on the side. Dude, when you come to Atlanta, I'm gonna take you to this one Chinese restaurant. My cousins took me to it this weekend, and it was awesome. Like, it's really good. It's let me see if I can pull it up.
Szechuan one the boss lady was talking about.
Yeah. Let me see. It's in Kennesaw. What is it called? Hold on one second. Chinese.
This is the perfect comment. I love this one. If you cannot afford to lose money, people should not be in the markets. Yes. Thank you.
Yeah.
Best comment of the night. Probably the best comment in the last couple months.
Yes.
Something so simple, but so true.
This place, if anyone is in Atlanta, this is probably one of the best Chinese foods I've had in.
Ooh, let me see those peppercorns in there, Chris.
Hell yeah.
Oh, you know it's good.
Yeah, man. It's Hunan and Szechuan. This was amazing. Their green beans, their fried green beans were top notch, dude. Every dish that came out was freaking a banger, bro. Every single one that we got. I mean, the tofu was okay, but I mean, I'm not a big fan of tofu, and I ended up liking it. So, but it was good, man.
The thing I like most about Chinese food, I've been watching like some like interior like places that normal tourists don't go, and the food is just so colorful, just because of all the peppers and just everything that they put in it.
Yeah, in the chat, what's your favorite type of Chinese food? Like, what's your favorite dish?
Like Southeast Asian or Chinese?
No, Chinese.
Oh shit! What's my favorite?
Thank you, honey. Yeah,
that's tough. Some people call it something different. I'm I love when I can get some peppercorns in there, man. I love that.
Szechuan Chinese is like my favorite type. Like, I'm not a fan of Cantonese. Like, it's like Cantonese is like okay, but yeah. All right, sorry, we were talking about Fiserv before we got distracted with Chinese food.
Got hot dog. Doug, you guys doing Money Mobsters tonight, or did you guys move that to Wednesdays? You got to let us know.
Yeah.
But yeah, man. So some fixed income. Oh, got some compliments in the chat.
Thank you. I'll take it. I need to keep going down on this weight, bro.
You looked good, man. You looked really good in New York. What was I say? So fixed income, man. I wanna pick your brain because I was talking with Steve yesterday, and it was like an Oracle bond that you could buy for like 80 cents on the dollar, 60 cents on the dollar, yielding only like 3 or 4%. And obviously that's why it's down, right? Because you can get stuff out in the market now for Oracle for 5% or more. And so, I mean, I think that there's potential value. So even if you were to buy it today, I think the yield to maturity was like just below 6%. But you have to think, if we're in an interest cutting environment, I feel like that yield to maturity is only going to get better because you're buying it at a discount, and the value of it's going to increase. So
check it out here. Just show everyone. So these are the different bonds that I just have on my bond tracking portfolio. Like, this one is for Google. This is a $100 face. The face value is always $100. I mean, the face value is 100, but the value that is currently trading it at is about like probably 98, around 100 par value. So if you look at this has a yield right now of 5.7%. Okay, so at one point it was like 102. It's come to 97. It's about $100. But that's a guaranteed 5.7% return every single year. Now, a lot of people saying 5%, that's like nothing, right? Like, yeah, but when you get to that level where you're like talking about $1 million, 5.7% is 57 grand a year, right? When you get to that certain wealth level, this is perfectly fine. It's acceptable for a lot of people. Now, if you're looking for like value where you want some capital appreciation, but then you also want to like get a good yield, one of the things you could do is buy something that's below par. Like, let's say this Oracle bond right here, right? The Oracle bond right now, the yield to maturity on this is 7%. Now, Oracle,
this might have been about the one I was talking about yesterday.
Yeah, so it's trading at $88. The face value of this thing is 100. Value right now is 88. What does this mean? This means that, let's say interest rates, they go down, right? So this bond generates a 6.1% yield. Okay, so on a yield cost basis to you, they're going to pay you like they owe you $100. They're not going to pay you like you owe them they owe you $88. So what happens is the money that you're going to get is closer to 7%. Imagine right now, my father-in-law, he has a mortgage of 2% or 3%. He wants a nice guaranteed return on his money. Well, one of the things that he could do is buy this bond right now, right? And now get a 7% yield on it. And if his mortgage is only 3%, he pays 3% to the mortgage, and he keeps the other other 4% for his own personal use for maybe property taxes or whatever. And Oracle is a company that has a tremendous amount of, like cash flow, so they're not going bankrupt anytime soon, or at least the risk isn't necessarily there yet. And he has this thing goes all the way up to 2065, right? So it's a very long duration bond. I don't know if it's callable. So I have to see what it is.
Yeah, I was about to say if it's callable or not.
Callable, yes. But the call date on this, the next call date is this right here.
Yeah,
I have to double
basically
check
expiring.
if this is accurate. Yeah.
Yeah.
So it's not really callable until all the way
I think
the way
they
to
can't
expiration.
be. I don't think they.
I have to look at it.
that far away.
Yeah, I have to double check on that, how that whole situation works. I mean, it's like they can only call it 6 months before maturity. Yeah, I mean, I'll take a look. I don't think this is inaccurate, but definitely have to look this up. But the point is, you'll get a 7% yield. Now, let's say the Fed says, okay, look, inflation is too high. We're going into deflationary mode. We're going to cut by 200 basis points. Okay, what does that mean now? That means that this value of this bond actually increases because the alternative, which is letting it sit in money market accounts, is a lot less attractive. So this 88 might actually turn into 100%. And if it turns into 100%, that means that now you're basically getting a 12% return. Well, no, not 12, like 15% return on the bond going from $88 to $100. And then you're collecting still that 7% yield going forward, right?
Mhm.
So you combine those two things together, it's actually pretty attractive.
And you have to think though that $12 move from 88 to 100, right? That's spread over, 40 years. So it doesn't show up that beautifully, right? But it's still nice. I mean, this is part of the things, like if you find a company and you're like, it's trading it for 50 cents on the dollar for their bonds, and you're like, I believe that this company is going to make it through. Like Oxy bonds back in 2020, when everyone thought Oxy was going to, including myself, thought Oxy was going to go belly up, until Buffett and who's the other gentleman, that's Carl Icahn, showed up and helped him out, right? Like I'm sure there's probably some bonds from back then that were kind of like put in place that were probably.
Here's some Apache ones. So I'm guessing that, let's see.
Yeah,
look at this.
Yeah.
When they acquired Anadarko, well, before they acquired Anadarko, during COVID on 6/30, these bonds were trading at 70 cents on the dollar. Now they're trading at above par. You're talking about an 8% yield on this thing. 8% yield on face value. Let me repeat that. 8% on face value, which means if you were able to buy this at 67, you're probably looking at a 12, maybe 13% yield on this every single year. 13% plus you got the capital appreciation from when this thing went from 67 to 116, or right now to 106. So you can go into the market right now, sell this. So you basically turned $67 into 106, and then you also got paid the entire time. Now, the funny thing is, if you look at Amazon, you actually outpaced Amazon, the returns on Amazon since then. So let's do 5 years. So let's say 5 years. So around the same time, I think Amazon was trading at, let me do max. Hold on. Amazon was trading around the same time here, right? About 162. Now it's about 206. So which one actually gave you a better return?
Yeah.
So I think the point is, sometimes you have to know what you're buying, and you have to rotate into asset classes when you see opportunity. So sometimes.
Sorry,
yeah, sorry, go ahead.
No, you
go
ahead.
ahead.
No, you finish your train of thought, because I was going to pivot to what Doug was asking for.
Yeah, so sometimes you just have to understand what you're buying and rotate into different asset classes when, valuations are either stretched in one side of the portfolio. So even if it puts a bad taste in your mouth, you kind of have to do it, because one of the things I keep hearing from people is that, oh no, it's okay. I I have a really low cost basis, so I can live with a 70% drawdown. And I'm like, why? Why do you want to? Why do you want to live through a 70% drawdown on a company that you like? I get it, you like the company, but you're willing to risk 70% of it? Come on, man, just rotate a little bit. So, I mean, if you're young, it's fine. But if you're hitting that age where you're like in your 50s and 60s, you should not be relying on a recovery from a 70% drawdown.
Yeah. Do you have the new Google bonds or not yet? I'm trying to see if I can find them.
Not yet. Let me see. I saw them on the news because they're not listed in the US. I think they're FTSE.
I saw UK. Yeah.
Yeah.
Let's see.
Let me see. Wall Street Journal has a good.
Oh, this is a cool statistic. So that you guys can talk about it at the water cooler with your friends tomorrow. Alphabet's sale of Century Bond is the text first in it. The text first since Motorola in 1997.
Yeah. Let's see.
That's pretty cool.
Google. Yeah, Google. They just cleared Wiz. Huh. They do not have the bond news on Wall Street Journal just yet. I wonder if Barron's is covering it then. I have to sign.
I guess they haven't issued them yet, so.
No, I mean they issued them.
Like
they issued them.
Did they? That's like actually issued.
Hmm. Chips right here. But this also tells me one thing. That means that the CapEx spending will go on. If the bond market's willing to support this and they're not abandoning mega caps, then they'll be able to do it.
They sold in sterling and Swiss franc.
Yeah. Let's see. Google.
So British pounds and
looks like they did
20 billion in US.
I wonder if it's in their filings. 10K. No, they won't have that.
Actually,
I mean, we'll know.
Speaking of
later.
Yeah. Which one was it? SCH.
You know, they upped it to 30 billion. This is actually old news. Right here, look. Because they originally were planning on issuing, I think, 20, but because there was so much demand, they actually upsized the offering. Check this out. Sorry.
No sound.
My bad. Here we go. Sure.
Still no sound.
Is it coming? No sound? Okay. Oh, sorry. I have to share again and also share tab audio. Also share tab audio. Share. Don't show this again. Got it. There we go. Now you should be able to hear it.
But the big focus will be the January jobs report due out tomorrow and consumer price index data this Friday. Meanwhile, Goldman Sachs CEO David Solomon said the sell-off in software stocks is, quote, a little bit too broad. Speaking at a UBS Financial Services conference, the CEO said plenty of companies in the sector will pivot and do just fine. And Alphabet has raised almost $32 billion in debt in less than 24 hours. The Google parent sold sterling and Swiss franc denominated offerings today, according to Bloomberg. The sterling issue included an ultra-rare 100-year bond. Those deals followed Monday's $20 billion debt sale. And that's your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance.
Man, I thought we were going to talk about it. Damn, $32 billion.
Not enough. Insane. Not enough.
I mean, the demand for this thing must. What's the yield on it, man?
That's what I want to know. Is I want to know what yield they're getting.
Last I heard, it was 100 basis points over over treasuries. So, let's see. Go away.
You know what I wish we could participate in
What?
is the Venture Global LNG, like 9.5% bonds.
We can if we want to buy it. PDI, baby. That's why we bought it.
Oh, is PDI in there? It's in
Yes,
PDI?
sir.
It's also in
Yes.
a Schwab one as well.
Yes, sir. So we are corporate debt investors by proxy. Fund pricing, portfolio allocation, composition.
That actually might be fun. I never done not dumpster diving, but like I haven't really looked at PDI and what debt vehicles are like putting money into. So that actually be pretty fun.
Yeah. Look at okay. Let me see. So here is the total portfolio. Let me stop sharing this and I have to share the other one. Share. This is the thing when it comes to fixed income during periods like this. These are all the different bonds that are out there. So
many different companies.
Yeah, I mean diversificate. They're very diversified, and they trade out.
Ineos. Yeah, I'd love to be a part of Ineos.
So let's see, not selected. I'll just use Control F. There it is. Venture Global, 9.5%.
Yeah. You know who also is SCYB, which is the Schwab High Yield.
Mm-hmm.
They have the 9.5s as well.
All right. We will take a look. This is all the what are they called? The MBS that they have on the balance sheet. A bunch of this stuff that they can use to leverage.
The thing that's nice about like PDI and like these high yield, it's like they get it from private companies too.
Yeah.
So like Quikrete, for example, it's like the Schwab high yield is like Quikrete, and I'm like, I couldn't get access to Quikrete, you know, like gives you that opportunity.
Yeah, and a lot of the stuff that they have, it's actually first lien debt. They actually have access because they have broad capital structure. Like the only thing that I'll say about this is that this is not a bond itself. So everyone here thinks that this is like a bond. It's like, no, this is a closed-end fund. So you have to know the nuances of this. So this is not just a regular closed-end fund, but they also apply leverage on top of their debt already. That's how they're able to finance. They're able to finance these dividend payments. But what's more important for investors to understand about investing in a closed-end fund is watching this right here, the NAV. Okay, the net asset value. If you want to understand bonds, you have to understand net asset value. Net asset value is the most important thing. Right now, people are overpaying. They're paying an 18.90, which is the current price of this closed-end fund, but the NAV is 16.89. Now, question is, how do you get around this? Right? Like the NAV is this low, which means if you have this giant premium, why would someone pay this giant premium? Right? So if it gets over here, you typically don't want to add too much into it. When it's down here, it makes a lot more sense. So the NAV, when it closes in, like the market price closes in on the NAV, it's actually a good value proposition for this. And you can see throughout the history, it's kind of like followed that NAV throughout. Now, the reason why this is attractive is because if you see this drawdown from 2021 going this way, right? The reason why this kind of drew down going down this way is mainly because the rate imbalances. So the Fed raised interest rates significantly. So if you have bonds that you bought at a certain price point, and then all of a sudden interest rates go up, those bonds are not as attractive. So a lot of those bonds right now are trading below face value. But you have two things going for you. Number one, duration. As duration closes in on the bond, the value of that bond gets closer and closer to face value. So your NAV naturally starts to increase, right? So that's number one. Number two, the benefit is as the Fed starts to cut interest rates, the value of those bonds starts to go higher. So that kind of means that now your NAV is going to go the other direction. This company has a history of paying above average dividends by a significant amount, and some of it is return of capital. So they actively trade these bonds. And sometimes what happens is there's something called ROC, which you have to understand, which is return of capital, which is they're giving you your own money back, basically. That is not good unless the ROC is something along the lines of them selling something that they bought for like 10 and then they sold it for 20 and they generated a capital return from that and then they pay you out some of it. If the NAV is constantly eroding, that's not a good thing. Okay. But once again, you have to look at this structurally to figure out where the value is. Now, there is a way to play this using Robinhood, which is very interesting, which is what I'm doing right now. So this has a 14.6% yield when I bought it. So I have 14 right now. Robinhood gives you margin, and the margin cost on a over $100,000 is only 4.5%. So if you take $1 million of this, right, and that's the amount that you're going to get a 14.5% yield on it. But now what you do is you use margin from Robinhood and say, let's say like you bought another 500,000 of it. So now you have access to $1.5 million, and you're going to get paid 14.6% on $5 million, right? You of course have to pay margin interest, but the margin interest that you're paying, you're only paying that on the other 500,000. You're getting to keep that other 10% yield that's coming from basically from leveraging your original principal amount. The benefit here is that even if the NAV kind of like comes down and it gets closer to it, you're not necessarily in a position where you're going to get margin called because the NAV is there, right? It doesn't trade significantly below NAV. Now, unless NAV drops really badly, then you got some problems, but that's when you should kind of decouple leverage. But essentially what you can do is essentially you're getting almost a 10% additional return on the money that's not yours, that's Robinhood's money. And you're with that 10%, you can basically eliminate any of that NAV erosion and you're actually still getting a higher yield. And so you kind of have this double benefit where your yield is technically 14, 15% on your cost. But if you're leveraging Robinhood's 4.5 to get 14.5, you're basically getting an additional 10% return. So if you average everything out, you'll probably make like 18 to 20% a year in actual returns per year by being in PDI. And even if there is some NAV erosion, it's not a problem because you're like, oh, 20%, So let's say the NAV gets eroded by 2-3%, it's fine. The 2-3% can be made up from that 18-20% that you're getting. The other benefit, of course, is that now that we're in a rate lowering environment where things are coming down, there's probably going to be a lot more people chasing these bonds, which means those bonds will go up. So that NAV over time, instead of decaying from ROC, that net interest income is going to be covered and it's actually going to go the other direction. I know I'm talking a lot right now, but you have to visualize this mathematically. I think I did it. I think we did it last time. So I'm not going to go over it again, but yeah. So these are the different PIMCO funds that are out there. They have some municipal bond funds. They've got some taxable CE, like closed-end funds right here. This is the PIMCO Dynamic one that they have. And yeah, I like it.
I think, yeah, as long as you're not an a-hole about how much margin you use, I think you can do it very safely. And you can still generate, really good money. And it's debt, believe it or not, is how the country just works, right? So the problem is that a lot of people, they use debt too loosely, and the banks won't keep you in check. You have to keep the banks in check on how much debt they're going to give you. So that's part of the problem. It's because the banks are always going to get paid. They'll figure out a way to get paid. They'll liquidate your fucking account. They don't care. So as long as you are the one that's keeping yourself in check, right, and not overextending yourself, then you will be a-okay. But it gets into the point where I see so many people, and it can be extremely beneficial where people can use debt and leverage themselves and like do extremely well. But I've seen so many people that get too greedy and they bite off more than they can chew, and then debt just bites them in the ass. So if let's say you have 100 grand, excuse me, and you needed an extra $1,000 a month, like PDI might be your thing. And if you wanted to, you could maybe go and instead of buying 100 grand, because you have 100 grand cash, maybe buy 110, 115 grand of PDI, go a little bit at a margin. But as long as you're not going, if you have 100 grand going into 150, or sometimes they might give you more than 50, depending on what assets you're buying, then I think you'll be fine, right? Like, so as long as you're not being a complete a-hole. And so if you think about it in that respect, if you were to go to like, let's say 115, like Chris is talking about, on let's just say that 15% yield, you're making 17 grand, but you're also borrowing $15,000. So in that respect, you have a drag of $750 a year to borrow that, but that 15,000 additional is allowing you to get, an additional $1,500. So basically another $100 a month. So
the part that scares people, like even good investors right now, is that, and people who understand this stuff, is this right here. You see this ROC, return on capital. Return of capital? So basically what happens is, let's say you have something that's worth $20 and they pay you let's say a $2 distribution, but $1 came from ROC. That means that your cost basis is not $20, it's $19. So which means that when you go sell it, you sell it for 20, that means that you have to pay the difference in taxes between 19 and 20. So a lot of funds, like, they have that return of capital feature in there. So it's basically going to keep lowering your cost basis. Now, imagine ROC 10 years down the line, you try to sell this, right? And your ROC has come down from when you bought it at 20, but because of its return on capital, now it's, your cost basis is $10, right? So you're like, oh my God, this sucks. Right now I have to pay taxes on this phantom money. And you have to pay taxes from between 10 and 20. But here's one of the things, and I shouldn't say this because my wife is watching, but putting something like this in, like, my father-in-law, which is what I plan on doing, his account, is that I don't care about ROC, because as he gets older, his cost basis is going to keep going down. But whenever he does pass away and money comes back to us, what ends up happening is now the cost basis gets stepped up. And once you have a step up in cost basis, you basically don't have to pay any taxes on it. So
it's morbid, but at the same time, prudent. And then I've experienced that firsthand with unfortunate deaths in my family. It's like, you don't realize how the tax system works until, you kind of go through it, unfortunately. So, I think it's pretty interesting. We've also explored, like, for example, my mom was like, oh, well, let me just like move this, because I manage a home for my mom. My dad's first house that he ever bought, he never sold it. And they rent it to kids that go to Villanova. Basically my mom was like, oh, maybe I'll just move it to you. It's well, first and foremost, like, she needs the depreciation from it because she still does work on it and, stuff like that. So that helps with offsetting some of her income. But then also, if she were to transfer it in our names, unfortunately in her passing, like, cost basis doesn't get stepped up for that. So,
someone was asking a good question about expense ratio. The expense ratio on this is about 4.46, but that's because they're applying leverage. So when you're borrowing money, the interest gets included in there. So it's like 4.46. And so the expense ratio without is about 1.67. But this is an actively managed fund, right? This is not like we just buy, hold, and everyone just goes party. Like, no, they buy and sell these things. They create these deals. This guy right here is probably one of the smartest guys ever. And he's actually in charge of PIMCO's main thing. Daniel is the chief investment officer and managing director at PIMCO. So just saying, you're not getting the B team here with this one. Yeah.
And I do want to say, like, just because we're talking about fixed income doesn't mean that it's appropriate for everybody, right? And I think another key piece that Chris said earlier, right, is you have to know the difference between investing in a bond and a bond fund, because they will act completely differently, and the price will change accordingly depending on what's going on. Both will react to what's going on in terms of the current federal funds rate and things like that, but how and by how much they will
Wait,
definitely change more drastically. Go ahead.
it's interesting. Doug saying tax bomb. Thanks, Dad. No, seriously, it's amazing he left his kids so much, but it's a tax bomb.
I think he might be talking about something differently, like how a Roth IRA, when it gets moved over into an inherited IRA, you then have to take it. So it might be a tax haven for that individual in their lifetime, but as it goes to the descendants, it might be more. It pretty much becomes an income stream that you have to take, and that gets taxed like a normal income versus like what the thought process is amongst a Roth. And so it could lead to people potentially, if you have the means and money, to potentially set up a trust rather than a potential Roth, because a trust doesn't necessarily always have to go to descendants and then become an inherited IRA. A trust, you just readjust who is in the who are the beneficiaries of the trust and directors of the trust, and so that trust is like an ever living thing, versus a Roth IRA. While it might have tax saving implications for that first individual, when it gets handed down, it kind of becomes a nightmare, if that makes sense.
Yeah,
And then you have you have RMDs and stuff like that.
Yeah, that's the other thing too. Like when you're investing in a traditional versus a Roth, you have to take minimum distributions once you hit a certain age, right? So that's a pain in the ass to deal with. Which one has RMDs? Is it Roth or traditional has RMDs? I think it's traditional. Yeah, traditional does.
Okay, maybe I am wrong. A Roth goes to the beneficiaries of Roth? I thought it went. Let's see. This is why I need to pass my 65.
Yeah. Yeah, traditional was the bomb. Yeah. We need an accountant here. Ken. We need Ken.
We need hot Ken.
We need hot Ken to guide us through all of this, because if you have a really good accountant, you could actually be your best like there's two people that you need when it comes to bonds that makes a lot of that you can make that basically can help you. Number one is an accountant, because they can help you understand how taxes work in a very secure way, depending on which investment you're looking at. And a lawyer, because they can go through all the paperwork and make sure that you're covered as an investor, like in terms of like what's secured, what's unsecured, if there's any like covenants in there. And now you could just use ChatGPT apparently. But then again, everything is.
I stand corrected. The Roth goes to a Roth. It's only the traditionals. And the thing is with the Roth is, you can take out that money whenever you want, tax free, but it has to be within 10 years. But you don't have to do it systematically. Versus, I think like a traditional, you have to kind of
cash out.
Yeah.
Henry.ai is coming for accountants and tax attorney. Yeah. Damn it, I'm an accountant, but not a really good one. Sorry, dude. Harvey. Yeah, I'm just talking about in perspective of raids. Claude Cowork can go over tax strategy. That's why LegalZoom crashed. Yeah, did you see that, by the way? Dude, AI's coming for all of these people. Charles Schwab took a nasty hit today. You see that?
No, what happened?
IBKR and Charles Schwab got smashed today because of this AI investing like tax thing that they have. Hold on, let me show you Charles Schwab. Dude, it's almost like AI is coming for everyone.
If I did actually try to do a 65 and actually start to manage people's money, I would definitely work with a lawyer, a tax lawyer.
Yeah.
Or just a tax accountant.
Look at this thing. All on headline. It's down 7.42%. And then IBKR. Dude, doesn't make any sense to me. Neither one of these things is, in my opinion, AI disruptible. I don't know why people think that, like, see right here. Oh, Raymond James. Sorry, not Charles Schwab. Raymond James. Concerns over advisory models. So basically, they're saying like these AI tools are going to help you as an AI investor. Charles Schwab, Raymond James, and Stifel, which are like money managers. I'll be honest, dude. I think all this AI bullshit in the stock market is completely dumb. I can beat AI when it comes to investing. I've seen a bunch of these AI tools, and every single person that set this up has actually lost money. Have you seen any successful AI investors yet?
I don't know if it was AI, but Jim Simmons did a pretty damn good job. But I don't think he was using AI. I think he was just using quant.
No, he was using quantitative models. There's a big difference between that. So now I think that there are so many like secondary things when it comes to investing that the AI can't pick up on. AI has way too many biases.
Yep. No, I think I've yet to see one that has truly outperformed.
Yeah. I have an idea, and maybe the chat can help us. Find us an AI investor, a good one. And so let's see if Cashflow Chronicles ETF can beat them. What do you think, Matt? You think we are up for the challenge?
What are we betting?
We're betting that we can beat the fucking best AI investors. Do you think we could do it?
Like the best open cloud
I don't know.
investors?
I don't care what it is. I bet you I'll smash that fucking thing. I bet you I can smash the AI because I know for a fact AIs, like, okay, look at this thing. Stocks picked by an AI. Let's see. Tech Titans. What is this? Is this investing.com? This is some shitty, like, wait a second. There's like an AI investor thing?
Yeah.
Does anyone use this garbage? There was no AI in 2013. How the hell is this thing beating that? IT 15? Is anyone here in the chat? Do you guys use the S&P 5? Like, not the S&P 5. Do you guys use like any no, Chris, you can't beat them because they also have access to high frequency trading and all those shenanigans. I don't care about that. I think that they'll bias. I think they'll lose. I think I can beat it. I can beat AI.
Until we make it, Doug. I have an extra computer just sitting back there behind me, behind the wall.
I beat Buffett. My total returns beat Buffett. Or at least they have for the last 3 years. I can't do Buffett 15 years, maybe 20 years, but I don't know. Damn it. Now I want to see what this is. I don't want to pay for this thing, though. What do you think? You think we should pay for one of these things and see what they have? You think it'd be worth it?
I don't know.
Let's see. AI portfolio. Let's see. Andreessen Horowitz. No, that's not it. I don't care.
Damn, they took down another stream.
Whose stream?
So the street exchange thing that I was doing, like it won't crash, but YouTube will just take it down. I think it's because like depending on what is showing at the time. So I might have to make the screen bit a little smaller.
Yeah, I'm not going to sign up for this thing. Portfolio AI generator. I want to see like who was it? Was it Seeking Alpha that had this? But basically, no, Tip Ranks. Tip Ranks had like this AI analyst thing. Have you seen that, by the way?
I don't think that's AI though. I mean, that's just like using quant.
No. They have an AI version of it. Like they got this thing where it kind of gives you like an AI rating. Like, I don't want to sign up for this thing, man. Everything you have to freaking sign up for. I got enough things I have. Let me see. It's like $9 a month. Do they have the AI analyst on here? But basically what it is like when you look at a stock, the AI generates its value. Like let's say I'm talking about Fiserv, right? So these are the different analysts that are covering it. And so one of the things that they've integrated is AI into this, where there is like an AI analyst that's in here. And they use like all the different aiding agents right here. Select a model so you can see like which ones that are here. So like let's say OpenAI is 5.2. According to this, the price target, I guess like the 1 year price target is 73. Stop trying to sell me shit. And it gives you like all the breakdowns and stuff.
I don't know, Mr. Patel.
What do you think? Do you think we should sign up for this and use this as a test against what we think versus what AI thinks? Then look at this. Gemini 3 Pro says they should be worth $72. Let's see. What are some? Grok says this is a $72 stock. Anthropic says this is a $72. I mean, they're all pretty much right next to each other. Perplexity says it's a $68 stock. I mean, it even uses technicals, which is kind of interesting. The stock is technically oversold with extreme bearish momentum with MACD. Trades at 63% below its 200-day moving average, creates a sink of further deterioration despite potential bounce potential, while fundamentals remain reasonably sound, strong profitability, expanding margins, solid cash flows. I wonder if this is not a bad thing to use. Let's give me a stock that you like that we can use.
Rock Lab.
RKLB. All analysts, blah blah blah. Where's the AI analysis? Okay. So it says $90 price target. According to
shit.
As a $92 OpenAI says it's $90 stock. Gemini Pro thinks it's a $96 stock. They all have the same biases, man. This one, XAI Grok 3 has $91. Opus 4.5 has 89.
You buying
I
this?
don't know, man. Huh?
You buying?
Am I buying what? Rocket Lab? No, I'm trying to get you to sell it.
I know. What about next decade? I'm curious what it says on that. And people were asking about it in the chat. Probably going to zero.
It does. They didn't even bother doing an AI analysis. One for the Chris and Matt win because AI is like, fuck that. It's not in its wheelhouse to cover. So it's me and you. They're gonna have to be the.
What about VG?
The stewards. I think that's big enough. I think that one should have it. Let's see.
Could be.
Yes, they do have an AI analysis. $10 price target. Gemini Pro 3 says 11. XAI says 10. You know, I'm actually in agreement with these guys. At the current price, I don't think that this is like the greatest upside. What do you think? I mean, it's greatest upside if you're looking 10 years out, but this is a 1 year price target. So I wouldn't necessarily counter this thing. That's why I'm saying maybe selling some covered calls on this thing is not a bad idea.
No, I think it's. I think we might see a surprise because I think for the fourth quarter, because I think that I think things may come in line, and I think that people were anticipating things were going to be worse than they were, and they might be slightly below. But I think towards the end of the year, people thought like everything, the spread was going to zero, and now things have kind of normalized a bit. And so
Yeah.
I'm curious to see what their forecast looks like for a full year, right? Because now you think about it, Plaquemines is almost fully up and running, and then you have CP1, which is fully up and running. And then if there's any potential, I'm curious if they guide for any potential ramp up of CP2 because they got the first trains at the shipyard now. Not the shipyard.
Yeah.
They had the first trains on site at CP2 now. So I'm curious at what point they think that they might actually start ramping up CP2, if that's in the potential for fourth quarter, if it's still going to be the first to middle of next year in 27. This is specifically Venture Global, guys, so not next decade. And so with that, I'm curious what they think the potential EBITDA would look like. But I think it's still going to look like garbage because you still have to convert all the CP2 debt. And until the debt to EBITDA gets way better, which it won't until I think CP2 comes online, and you start getting EBITDA from that, I don't think you can go and I think you'll help the investment grade for the entire company. But I think until you get CP2 online, I don't think you can go out and refinance those 9.5% bonds that we were showing at the corporate level, if you remember, VGLNG bonds. So you might still be able to refinance and get better quality for Plaquemines individually or Calcasieu Pass individually. But I think the big drag right now is those VGLNG bonds. And if you're able to get, I don't know how many it is, but it's like a couple $100 million worth likely of drag that if you were to refinance, you'd immediately have going directly to the bottom line. So
I'm gonna sign up for it real quick, just because I wanna see like what this AI is thinking. Give me 1 second, okay? Once I sign up, I'll oh, wait a second. Damn it, you guys are seeing my stuff. Hold on, stop sharing.
I was about to say, I was like, I don't know if you want to be sharing this or.
Yeah. No, I definitely don't want to share my PayPal. Where's my phone? Give me a second.
Yeah, Chris bought me puts. That's right. From 90 to 70 something. I actually did sell some more covered calls on Rocket Lab today, and I made like 12,000 in premium. And it wasn't for the whole position either. So it was nice. I'm using that to, I don't know. Chris is probably telling me I should be smart and buy puts with some of it, but I think it's time I buy another Rolex. What do you think, Chris?
Don't be a greedy person, dude. Come on, you're not a greedy guy. Just be smart. Be smart. I told Matt, I said, look, why don't you just sell some really far out of the money covered calls, short term, like June, July, and buy really far out of the money puts so that this way you can sleep good at night. But he's saying he wants Rolex. So what can I do?
I want Rolex. I want Lambo. I want house in Georgia.
Okay. Well,
I want weekend house in Georgia with near hot Chris.
Okay, so here we are. This I signed up for just for you guys. Okay, because now we're Cash Flow Chronicles is powered by AI, baby. So let's see. Let's see. What did we say? VG?
Yeah.
I mean, it actually incorporated like the stuff. AI analysis right here. So right here, CP2, it actually got the risks in here too. Business overview, revenue models. That's fine. Technical analysis, 50-day, 100-day. That is not bad. Huh. Interesting. As a peer comparison thing. Technical analysis. Yeah. Let's see. What is this advanced charting? That's I don't know, bro. This is not for me, to be honest with you. I like to do my own research. I don't like relying on this magic of AI to do the work for me.
Get your money back.
That's fine.
Oh,
It's
thank you
$100.
for the 5 gifted, my man. You're the man.
Who hooked it up for us?
Hot Doug is.
Oh, it's Doug. Thanks, Doug. Appreciate it, Doug. Amazon. Let's see. Amazon 12-month forecast is 280.
It's not
Stock
enough.
now. Ooh, look at this. AI stock, blah, 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 says it's worth 242.
Man, fuck this thing. What about NVIDIA?
NVIDIA? Let's see.
This thing's just like.
All right, before we go
everything's-
to it, what does everyone think? What does everyone think it should be?
For NVIDIA or for.
Yeah, what do you think NVIDIA at the end of the year should be?
225. I don't know. I still want to be bearish for some reason on NVIDIA.
I think it should be at least. I would say probably like. I want to say like 225, maybe 250, 260. AI thinks this is actually undervalued right now. Oh no, that's top analyst. Ooh, look. It says NVIDIA is only $205. Let's see. That's OpenAI 4.0. Gemini thinks it's 207. XAI is 202.
Man, this AI shit's bearish, dude. Bearish. Bearish. What does it say for SPY? Just put regular SPY in there. What does it say?
Yo,
Probably-
people in the chat are getting pissed off, bro. Do Palantir. I wonder. PLTR. I'll do SPY in a minute, guys. Oh, this is 191, but that's like the regular analyst. AI analyst is not bad. 153. It's only got a 10% upside from here.
Man, I think they're not going to give anything that's like a 20% upside.
That's not true. That's not true.
What we've seen is nothing go north of 20%.
I mean, maybe that's where we are in the market, you know? Maybe there's an AI screener that'll give us the best options. Let's see, target upside 20%. I don't care about this. Let me get the AI rating. Buy. Yes. Give me all the stuff. Give me all the alpha. Let's see. Smart score. Analyst price targets. Or I don't want the analyst. I want the AI. Give me the AI target.
Damn, everyone's all about NAGE. We gotta ask Hot Ken about
ServiceNow. Let's see what AI says. AI says there's a 10% upside.
Yeah, dude, this fucking shit's bullshit. You got scammed. Get your money back. Get your fucking money back, bro. You got fucking hustled. You got hustled.
Basically, this just says whatever the stock price is right now, it's got 10% higher, and that's it.
You got hustled.
You stupid AI. I don't want to get no 10%. I don't want
6%. All right, baby, it's real.
Oh man, this is not good. Let's see what. There's got to be something that gives us more than 10%. Come on. There's no way.
Did Steve actually end up buying PayPal or just you?
I bought PayPal. I don't know
know
about
you
Steve.
did.
Let me see. Maybe there's like a filter. Come on, AI. Give me some strong buys. Okay, what does AI say? There's like a strong buy. Let's see. Credo. Analyst estimates. Okay, this one, Broadcom. Okay. What does AI think? 15% upside.
Shit's a scam. Shit's a scam.
No, according to Gemini, there's only a 2% upside. Then the question is, have you seen anything that's negative?
No, I haven't seen anything yet negative.
Okay, so let's look at a
It's a
company
scam.
we know it. Let's look at a company we know is garbage, and it should be going down, but it's not going to give us that target. Well, give me one garbage company.
Salesforce.
That's fucked up. Don't do that. Don't do that to Steve. Don't do that to Steve. All right, in the chat, I don't know how to look up Open Door. Good. That's a good one. Yes.
GameStop, maybe? I don't know.
I need some companies that should be going down. Let's see. AI analyst. This one still gives you a 6%
It's a fucking
upside.
scam, bro. Get your money back. Get in customer. Contact us right now. And say this doesn't even show anything going down.
Hims, Carvana. Okay, let's look at Hims. Let's see. Is there anything that this thing says is supposed to go down? AI. Let's see. Price target $30. It's supposed to be a 74% upside for Hims. I'm sure the Hims people are going to be super happy about this.
Wow. Okay.
So there you go. You were asking a question, Matt. Who has the most upside? Apparently, Hims does. AI thinks this thing should be worth almost 68% more.
Yeah, somebody said BM&R. I like that.
Okay. Dude, I don't even know if Tom Lee knows how much this shit is going to be worth. Let's see. It does. They're like, nah, they don't cover it with AI. There's no AI coverage.
Did they report any revenue from the staking in the quarterly earnings?
Know. I'll take a look. I didn't see anything. Because I think they just started it like after the New Year, so I don't know if they're going to report that yet. So
I wasn't sure if it was like the last week or the second to last week of December.
Ooh, this is the first one that has a negative. Nebius, it says it's supposed to be down 10% from here. Ooh, IREN. Okay, good one. IREN. Let's see. Okay, so do you trust the AI to craft a portfolio for you?
Not yet.
10% for IREN. DeepSeek says 18%. Anthropic Opus 5 says 10%. I don't know, bro. I don't know about this. I wish this thing had like, what is it called? Like how right and how wrong is the AI been?
That would be nice.
You know. The one thing I don't think AI can do is gauge human emotion. I think it's a terrible job at navigating human emotion. I actually beat an AI chess application one time. Do you know how I beat it? I went full on retard mode. Like I would be doing the most retarded shit ever. And the AI was probably like, what's this guy doing? Why the hell is he moving his queen? And
you beat me at chess. That's all I know.
It wasn't like a really hardcore advanced chess model, but it was like some low grade beginner level chess that's supposed to be used to help like teach kids how to play chess. And it was beating me for the longest time. And I was like, man, what the hell am I doing wrong here? And then I realized that I was thinking too much like a normal person. And so what I did was I went retard on it. And then I was just making random ass moves, and it was like blunder. And then it would look at blunder, and then it would be like blunder. And then I'd be like 3 blunders in a row. And it was actually a great advanced strategy that kicked the shit out of AI. So yeah. Trade knights, then close the position with bonds. Yep. That's how I win at trading too. That's hilarious. Okay, anything else, guys? Anything else? I want to know, like, if anyone else wants me to use this AI bullshit before I cancel this dumb thing. I wonder if it's got a free trial. I should cancel it if I can get my money back.
Get your money back. That's such bullshit.
I might have to keep this thing for a year. Next renewal is 2027. Upgrade. I don't even want the one I have right now.
Yeah, tell me
account. Delete account request. Okay, let's see.
Give me my money back.
Steven is on here. He's actually one of the highest ranked analysts. Check this out. Like, share the screen. Look. Let's see. Steven.
I might fall off because it's been almost a year since I've been.
Steven Fiorello. He's the worst performer on our 1 year competition, ETF wise, but he is the number 12th out of 322 bloggers. 12, dude. 12.
Check out your boy Matty Moolah. Where's he at?
Are you on here too?
I am.
Let's see. 1 year benchmark. I don't care. Let me see. One more, man. What the hell? All right, let's see. 94% bullish. Palantir has been Best Buy. Let's see. Okay, let's see, Matt. Did you even give it like authorization to do that before they just randomly took you?
They just took me.
Oh, Matthew. Was it Matthew or Matt?
I think it's just under Matt and then Farley.
Matt Farley. Ah, there you go. Blogger from Seeking Alpha. That's why. Ah, you're 772. But your average return, look at this. Rocket Lab, 400%. Next Decade, 100%. Celsius, 100%. Alphabet, 33%. Palantir, not really much.
I gave it neutral, so that's why I didn't count it.
Okay, so I think that's what they did. They basically took your Seeking Alpha information and they plugged this in here for you. They didn't even ask you. They're not even giving you, and are they giving you any money?
I wish. No. You mean
Just
Seeking
jack-
Alpha? Seeking Alpha pays me.
No, Seeking Alpha does, but I'm saying these guys don't. They just jacked like that. I wonder if they have a Chris Patel somewhere. Let's see, Chris.
Oh, they might.
No, I don't write for Seeking Alpha, so I probably won't be. Nope. Yeah, I got the franchise all to myself.
Who else do we know on Seeking Alpha? Amit's never posted anything. Dom. Let's check out Dom.
Okay, Amit Kukreja. Let's see.
Uh,
No, or maybe Amit is investing? No. Dom Rinaldi. Dominic. I haven't seen him in a while. I think he's retired at this point.
That's RI, I think.
Is it? What is it?
Let
Let me try this. Rinaldi.
Yeah,
There it is. Dominic Rinaldi. He's up there too, man. Yeah, Dom's got good picks. I mean, some bad ones too, but he's got really good picks otherwise. NVIDIA, Palantir, Mercado Libre.
Is Josh Brown on here?
I would assume so. He's big enough. Brown. Josh. Nope. I think it's people who write for Seeking Alpha. Josh Brown. I don't know if there's any other. Oh, there it is. Josh Brown. Ooh, not good. But that's only because they only found one thing on him.
Yeah.
Barrett. That's probably why. Interesting. Top financial experts. John Stevenson is number 5. Who's number 1? I bet you they make
pay
you
for
pay.
it. You'd be able to. I think you probably pay now so that you probably see it.
Let's see. Who's the best? Trump dashboard. No, something went wrong. Let's see. Top analyst stocks. Immunex, Keppel. I don't care about all this shit. Let's see.
But
Let's only do large and mega caps. Stock rating is a strong buy. Sector. I don't know. I'm going to see on like the analyst side, the experts, top analysts. So these are actual analysts. An average return. This guy has 20,000 followers. Let's see who's got the most followers. Quentin Bolton. Okay, let's see, Quinn. What is in your wheelhouse? An average return. D-Wave. I can't take this seriously, bro. I'm sorry. I got gypped. I'll be honest. I got gypped.
Yeah, I need to start looking at some of these research houses. I might do my own research house. Start that.
What do you mean, like your own like research blog?
Yeah.
It's not a bad idea, actually. You can actually do that with Claude, and see where things go.
No, I mean, because I've done some thoughts. I think there's some really good experiments to give people an idea as to like what you think that the risks are for each company, and so it's actually something that I was hoping with the Street Exchange, if that actually started to make some money, I'd actually pay people to kind of like Seeking Alpha to an extent, but create a research house. And my hope is that if you create relationships, like let's say we did Venture Global in next decade, right? And people came to us, it's like, well, then hopefully we'd be able to also know key people in their investor relations team and like, you know, forward them the kind of analysis and see if they have any pushback or thoughts on it. And try to get relationships with the company, and instead of, you know, doing stuff on Seeking Alpha, you can kind of do it on your own. And if people want some of the more detailed stuff like that, then maybe they pay a small subscription, kind of like Seeking Alpha, right? But Seeking Alpha is expensive. It's like a couple $100 a year. I wouldn't want to charge people a couple $100 a year, but enough to basically feed and like start something. And then the hope would be is that they would have access to kind of like what they do with Seeking Alpha. But the thing is, I wouldn't let just anybody write, right? I mean, I'm not saying that anybody can write for Seeking Alpha. You do have to do some work and due diligence. They don't just let anybody publish. But I would vet the people that, like, I wouldn't be writing on quantum computing because I don't know shit about quantum computing, you know? So like if I were to have anything for quantum to come through the research house, it would have to be from somebody that, you know, I trust and I feel like has the interest at heart. And the hope would also be is that if it gets large enough, we could send people to the actual conferences themselves. And conferences is just a lot of networking, as you've seen, and also the ability to potentially continue to rub shoulders with the executives and not get private information or anything like that. But I think sometimes those conferences don't get fully covered in the write-ups and the headlines. So my hope would be is that you do a little bit more traveling and you'd get to go to the World Economic Forum, shit like that, you know?
That's kind of been my reason for doing social media. I hate talking to like, you know, the camera directly, but I like talking like me and you are having this conversation so that this way I can flesh out a thought process. And the interesting thing is I want to grow my social media presence only because I want access to information that you can't get while you're basically just sitting behind a screen. Like I realized that after going to that Robinhood Summit, because there were people there that like people with real money. I'm not talking about a few $1 million here and there. I'm talking about like the number of like zeros on their screen goes beyond what the allowable is. You got a landscape. You ever met them? You ever met anyone like that? They couldn't show you how much they actually had in portrait. They had to actually landscape it to get to that level. That's crazy. When you see some shit like that, that's like, he's like, oh, hold on a second. And he went this way and then actually showed the full freaking amount. I was like, you know, and
That's you, Chris.
That's not me at all. But the point is they have enough money to basically make changes happen at the board level. So someone actually on my Discord today said, Chris, you should try to invest and go activist on like PayPal. I'm like, I don't have enough money to even remotely proxy these guys. You're talking about a $36 billion company. I have maybe the ability to proxy like a mega small cap, like a super, super small cap. But that's where the money is, to be honest with you guys. Like, if you get into the right board, and that's mine and Matt's hope one day, to maybe one day get on someone's board, like get a board seat for ourselves. And hopefully with the right plays and the right connections, maybe one day that'll be a possibility for us, but not yet. But yeah, one of the interesting things is like just how correlated some of these stocks are to each other. And I think right now, Norwegian, look at this. It lines up exactly with RCL and CCL. If they end up actually like controlling their debt, this thing will probably end up a little bit higher. So RCL is going to, NCLH will catch up. But it's always interesting to see these charts because they all like, look at this beautiful correlation to each other. Mm-hmm. These sector-wide connections are amazing, dude. And this is Viking Holdings. God, I love this thing. Yeah. All right, Matt. We will get back to you guys one of these days.
We are 4 people from hitting 5,000. So if you guys are watching this and it's your first time, you haven't subscribed yet, please do us a favor. It would be awesome to wake up tomorrow and see 5K. So Chris and I've been doing this for over 2 years, I think, at this point. So it would be absolutely phenomenal to be able to wake up and see 5K.
Yeah.
One of these days.
Damn it. I got to cancel this thing now, but it won't let me cancel. Now I have to figure out how to cancel this stupid thing. Oh wait.
Now we're just 2 away, Mr. Patel. Just 2.
Are we? If you're on Twitter, if you guys are on Twitter, please go to YouTube, type in Cash Flow Chronicles, and subscribe. We don't usually like to be like, hey, please subscribe and like this, thing. But if you could hook it up, come on, get to that 5. Someone help us out. You think we should stay on here until someone gets us that 5?
It'll happen by morning. Everyone's just going to start unsubscribing.
Watch it go down. Watch it start going the other way. Let's see. Come on. Somebody in the chat. Create a bullshit account. I don't care. Don't make me get the Bengali Bart farm.
Somebody did unsubscribe.
What a dick. What a dick.
You know who you are.
It's Doug. It's Doug. For sure it's Doug. That was a dick move. Whoever did that.
More people are unsubscribed. That'd be so funny. It just goes to like 49.80 and we're just like,
let's see if anyone else starts to go the other way. Come on, guys. Now we need 3 people.
There we go.
There we go. We're positive again. Okay.
We're going in the right direction. I've gone in the right direction.
Now they're just messing with us. I think it's someone is subscribing and unsubscribing at the same time, back and forth.
That's true. Doug does pay more than anyone else for this YouTube channel.
That's true.
With the amount of people he's
all right. I think if we keep showing this, there's gonna be more people that are like, screw it, man. I'm just gonna unsubscribe just to mess with these dudes. Get rid of this thing.
100%.
Get rid of this.
Yes, we also broadcast on X as well. Just to try to get the exposure. And eventually the hope is that people will come over.
We lost more viewers. Damn it.
You're going to 0, man.
Get rid of this. Get rid of this.
But appreciate everybody. We had almost 200 people come on, and over 200 people at one point. Obviously, some people on X as well, and we know that we were competing at a large point with Steve and him him and Asian Steve were talking technical analysis, and another piece that I want to say, and this just goes back to, it's like, please, I encourage you to watch. Somebody just texted me the unsub was me. The listen to a lot of things, right? Feel things out. But my hope is that people don't just like, because Steve is potentially venturing into trying something different, that you guys are like, oh, Steve's doing it, I have to do it, right? There's 5 to 10% of you that I met that literally just say, you guys are my due diligence. Why would I need to do my own, right? And my hope is that you recognize and are smart enough that you say, hey, I work a 9 to 5. I don't have time to be watching the markets all the time. I probably shouldn't day trade, right? Like that is something that I want people, and I trust me, I say this because I've done it myself. I'm not saying it to try to be a dickhead. I thought that's the only way you could do things in the market. And I learned very quickly that day trading was not the only way to do it. Thank you, Easy. Much appreciated, brother. Much appreciated. So I'm not saying don't day trade, but I'm also just saying, like, please take that opportunity to understand that not every single thing that we talk about, fixed income or day trading or swing trading, is 100% what everyone should do, right? Learn a lot of different things, feel your way out. It's about kind of learning more and climbing up the learning curve. I personally have been a victim to finding out about something and getting shiny object syndrome and thinking that I knew everything about it. And
BMNR,
that's a lesson.
BMNR. That's for me. BMNR got me.
So
I thought all my boys, we had our coverage. Even I got it wrong. I'm a crypto hater. I don't even like crypto like that, but BMNR got me. That happens.
You didn't listen to your main boy. You didn't listen to little Matthias.
I should have listened to you. You were screaming, "Hey, listen, the winter is coming," and I was like, "Nah, man,
fuck winter." I heard there was people, I'm not going to call them out, but they're like, "Winter? Come on, institutions are involved now."
Bro, Larry Fink got me. Larry Fink came out and said stable coins are the future, and even Jamie Dimon, the biggest hater of crypto of all, was like, "Yeah, we're looking at doing stable coins." I was like, "Oh, Jamie, you capitulated, so I have to capitulate now."
Yeah, and we are. I'm on Twitch, so you guys can always follow that. We don't have a Cash Flow Chronicles specific for Twitch, but I do have my own personal Twitch, and they have like 150, 200 people on there. It's nothing crazy. Not following live, obviously, but just following in general. So that should also be in the description. If you guys are interested.
Yeah. What do you think we should do? You think we should pull an Amit and do a you remember that time where he did like a 24-hour, like what was the thing that he said? I will be a somebody or something, when he said that like a million times or something live streaming. He did it for like 8 hours. You remember that?
I do. I remember that.
Okay, put it on. Let's show people if he still got it. Thank you. Now get rid of it. Don't put it away before they bring us back down to $49.99.
I'm not looking at it. I'm closing it. So even if you unsub, I'm not watching it. So I appreciate you guys. I don't remember what it was. I don't even know how I would be even to.
I was trolling him on the stream for at least a good hour, dude. He was. Let's see. He did it on his main channel, so it's probably his longest video. Let's see if I can find it.
That's probably true. It probably would be his longest video. Although if it's on StreamYard, then
he did it. Let's see.
Shadow Government's chiming in.
Does anyone have that link by any chance? Because if you do, then we'll play it. But this was Amit when he had. This was Palantir Weekly. Like, geez, that was a long time ago.
When did it? Let's find out when I came on to Palantir Weekly.
Okay.
Is there a podcast specifically for it? No.
Let's see. 3 years. SoFi Weekly. Jeez. This takes me back. Finance Junkies, episode 1. I should have done Enphase that day. We shouldn't even call it Finance Junkies. It was Chris shits on Enphase Weekly.
Hey man, Enphase is finally doing what I wanted them to do from the very beginning. I said Enphase
Go
won't get
commercial?
anywhere until they go commercial. I remember making that statement like 2 years ago.
This dude, like, every day he would just mess up his hair. That was his thing. Let's see. I have to go to the oldest. Let's see. Q4 Live, Palantir. Where is that stream, bro? Where is the stream? Jeez. That's Adam. When Adam joined us. And then Code Strap. Arnie and Dom, 22.
That was number 15.
Palantir earnings therapy session.
I don't know when I started joining.
Yeah. Look at this. This was 3 years ago.
I'd actually be curious to see what I said on Palantir Weekly.
Yeah, where are you, man? Amit does a terrible job of like naming the archived stuff. Like, see, this is where, look at this. Look at the view counts on this stuff. Like, it was 1,000 views. So anyone in the chat, if you're thinking about starting a YouTube channel, just go ahead and start it, man. And even if only 5 people show up, who gives a crap? Go for it, because you never know where this thing actually ends up.
The first podcast that I did with Palantir, you guys are probably, this guy doesn't know shit.
Let's see.
Sure.
SoFi. What is this? Saving myself. Why I missed my first market open in 3 years. Jeez, man. How far does this go? I should call Amit right now. Be like, what is that stream called where you basically said something? All right. You know what? I'm tired of looking for this. Is too much. Unless he actually did like a finance junkies, full stock coverage, my portfolio positions, options with TJ. I don't know.
Grammy Drake 2021 album. Okay.
Yeah, I don't know, guys. If someone can find it, we'll play it. But yeah, look at this, man. Look at this guy. I still remember when he first like contacted me, and I was like, bro, do something about your hair. Look at this.
Is this his third video? Nah.
This is just one of his first like
Live streams.
live morning lives. This is his first morning live.
Hey, he's been doing it since 2022.
Yeah.
Good for him.
Look at the hair, bro. Who does this? You remember Lord Farquaad from Shrek?
Yeah.
I mean, what did he go into the hot barber shop looking like, bro? He was like, yo, make me look like Lord Farquaad. Hold on a second.
Yeah, I've seen that. We lost Chris. God damn it, Chris. Oh man. I've seen that reel that people I put up, and he's like, make me look like this.
There we go. My bad. There we go. Hold on. My headphones got disconnected.
Disconnected yourself.
Yeah, I did. Give me a second. So this is Amit, and this is
Wrong screen.
there it is. All right, my bad. Let's see. There we go. That's Amit right there. I'm serious, dude. Look at this haircut, man. What do you even call that?
I don't know.
It looks like he got it permed too or something. Oh, dude. Amit. This guy. Good times. Good times.
People are gonna start sneaking in the stream. Go for it. Sneak on in.
Or
I have
I
to
don't
let,
care.
yeah, I have
I
to
don't
let
care.
them on. Depending
Come
on who
on.
it is.
It was easier in the Junkies days. The Shakespeare. Is that what it's called? The Shakespeare? Yeah.
That makes sense.
Yeah. Matt's got good hair. Matt's got good hair. Matt's got those baby blue eyes. That's his thing, man.
Thanks, man.
Yeah. He get lost in those deep baby blue eyes.
That's the hope.
mop. Yep. All right. I think that's it. I need to get to
A
work.
mop.
A mop.
Work is works for quitters. But no, I appreciate you coming on. Hopefully Thursday, we will be able to do something. I'm waiting for Michelle to let me know when we're going to Uchi.
Uchi, what is that? Japanese restaurant?
Yeah.
Figure.
Although you gotta give me your whatchamacallits, Thai recommendations, because I don't know anything when it comes to Thai.
Like Thai food or like
Yeah.
Thai restaurants?
Yeah, Thai food.
Drunken noodles, pad ki mao. That's it. Pad ki mao, drunken noodles. I'll send it to you. You can check it out.
Okay.
I'm surprised have you never been to a Thai food place?
I normally just get curry.
Okay.
So
The Penang curry, probably.
yeah, probably.
Yeah, drunken noodles. I usually get it with chicken. You could get it with beef if you want. But that's what I would recommend.
Yeah, probably should.
Yeah.
There's some pretty banging not fancy places, which I don't necessarily always like fancy. So sometimes I just like nearby. Yes, we do. We need to have a dinner sometime soon. Doug, Michelle, Ray, Julie, I know already signed off. There's a few others here. There's a couple people that have reached out to me as well. So I appreciate that. If you guys are in Houston, please feel free. Might meet you at a cigar shop or something like that. Some neutral location. So you don't feel obligated to, if you're like, Matt, it's actually really weird, I'd like to get out of here, you can. You don't feel obligated to stay,
Yeah.
All right, man. Well, I appreciate you coming on Thursday, or play it by ear.
Yeah, we'll play it by ear. Oh, Cam, pho is actually Vietnamese. It's not Thai.
Yes, it's Vietnamese.
Yeah. All right, guys. Have a good one. Take care.
Thank you all. Have a good night.
That's my quant.
Your what?
My quantitative.
You show me a pay stub for $72,000 on it, I quit my job right now and I work for you.
Be first, be smarter, or cheat.
I'm not fucking leaving.
Sell it all today.
Or look at it say, it's beautiful.
Welcome to the fucking show.